Hey, fellow traders. It's time to do a long overdue video and get back into the swing of things. I've been kind of working around a lot with the computer, that one thing led to another after another after another, and I've just about got everything set up. But this video isn't about what I've set up, it's about trading. So for this topic of this video, we're going to talk about objective support and resistance. In this video, we're going to cover a few different things, starting from the very basic as what is support and resistance. Then we're going to move into what defines a valid level. So you're going to have some key criteria to look for. It's always going to look the same every time you set it up. It's going to work out on every pair, every time frame, so on and so forth. They are always going to come out the same, thus making it an objective way to define that level and find it every time. And then we're going to learn to filter which ones are actually quality levels and which ones are actually junk levels, because you're going to find out that some may look pretty good, but they're going to lack a certain thing or another, and that's going to make them junk instead of quality. It also will kind of have something to do a little bit with your goals, which we'll get into. And then we're going to go over finding patterns, because just like price action and time frames, these levels are actually going to form in patterns. So we're going to talk about that. And then to round it out, we're going to talk about how and why we would want to use these levels that we're finding in this video, and how we can be extremely effective with them to not only increase your win rate, but also give you a lot more confidence in your trading, and also help you in reducing the losses, which will ultimately lead to better gains. And then in the final wrap up, we're going to look at how to practice, and I'm going to show you some examples, and I'm actually going to show you exactly how you can do this with just a little bit of time. We'll kind of go over how you can practice this and gain confidence and seeing how it works out. So to go ahead and start off with, we're going to look at basically what is support and resistance. So basically the easiest way to think about this is support is going to keep price up. It's going to hold it up. It's going to support it. It's going to carry it. It's going to keep it from going lower. And then resistance is going to be the same thing, where it's constantly pushing the price down. It's basically preventing it from going any higher. So basically, a lot of people will comment this as saying that support and resistance is just basically a place where price reacts and changes direction. But then you start involving other things such as price action, so on and so forth, and just numerous other details that I'm sure you've probably run into on other channels. And that can start clouding up and colluding what you might think would be a valid level, and it would make you kind of see levels and see things that aren't really there. So what we're going to go ahead and move into now is, let's go ahead and look back at our summary. I'm going to show you basically on a chart what is going to define a valid level. They're going to look the same every which way you look at them. And I've already kind of pulled up the EURUSD. I'm currently holding a trade from here that I entered in Friday long. We'll get into more of strategy and what I'm doing exactly, but I've got a few other levels planned out from below that I'm going to be working from. Go ahead and actually add. I've got something sitting there for later. I've also got these other marks for some other positions, but we'll get into that a little bit later on in the next video. In this one, we just want to look at objectifying support and resistance. And the EURUSD is what I primarily trade, so I've already kind of got this marked up, but in a moment we're going to go and look at a different chart And the most important question is going to be, where do you start? What is your time frame? So I generally like to base the time frame more along the lines of how long are you looking to be in the trade? What are you looking to do in terms of observing the price action? Are you looking to stay on the chart, or do you want to more or less kind of put something on and walk away from for a while and check it every now and then? For Forex, I kind of recommend a longer term strategy. So I'm going to show you off of the 1 hour, 4 hour, and daily. But these same principles will still apply on the shorter terms. They're still going to look exactly the same. So let's go ahead and start with the clean chart. I'm not going to change this one, but we can let's go ahead. You know what? I'm going to pull it up this way. Let's go ahead and look at the cable. See what's going on with that one. And we'll start setting this up. So in a general sense, we're looking for price as an overall perspective of what's happening. So in this instance right here, what I'm kind of doing is I've got everything scrunched up. All I'm looking for are basically flat spots or extreme points of where a wick might be. And if we go into a higher time frame, I'll show you these wicks. So like you're really looking for either some wicks that kind of stick out, some double wicks. Those are going to be key areas, because anywhere you see a wick, that's immediately going to be a support if it's crossed, and could end up being resistance if brought back below. Usually these wicks indicate those strong reactions that we're looking for. So you're going to start kind of looking around to see where you find some wicks, and then you're also going to look at where you're finding flat spots. So let me get out of the pencil tool and we'll pull up our line. A lot of people will say use a range, use a box, something like this, but one inherent issue with that is you're looking at an extremely wide range of area. And what I actually propose is using a line. It's a lot more accurate. It allows you to pinpoint your entries, and we're also going to do something with it in our next video. So that's going to entail part of the strategy. For now, we just want to focus on finding these levels consistently. So in the example of the cable of what we're looking at right now, I'm going to clear these out. Where is it? That's the button I need. There we go. Basically, we're going to start by just looking at our flat spots. And what I'm going to start observing from is basically where these high points reach and price kind of bumps into several times. Now, one rule that I'm going to tell you with this is that when you're looking at flat levels, you kind of want to try to line up on your points and where your flat spots are. So I'm going to look at this flat spot here. We have a point there. We have a point there. We see that it's rejected as resistance there. It's holding price down, knocking it back down. Then it came back above, and now it's holding price up. It's shoving price right back up. So we're looking for areas where these points and these flat spots tend to line up best. And if we carry this back a little bit further, we can see that it's going to line up in such a way to where we're still seeing those little flat spots. We're seeing reactions there, and kind of observe that it can go past it just a little bit. And this is going to be a little bit of a detail that we're going to look at later on, but just always know that you're going to look for the most common area where that price is. See, we have a little bit of a wick here and then a pushback above. That's going to carry in with the strategy portion later on, but we'll pull that back. And in this case here, I would probably look at something here. Notice how we have that strong wick right here at this point. Then notice price kind of respected it and then it plowed through, came back up, broke above, broke back below, got a wick, pushed down below. But now we're looking at the flat spot here on the very top of this area where price pushed back above. Now, in this situation, we're starting to get a lot of different areas. Now, if you're in a smaller time frame, you're probably going to use some tight knit areas such as this, where price rejected, broke above, supported. So you're going to start getting tight like this. And the reason I recommend kind of starting with the point of how long do you intend to be on the trade, how much do you intend to really observe the chart and look at it. So if you're looking at a higher time frame, a lot of these are not going to be what you would probably look for or want to use. So in this situation, I would start by actually going with the wicks and the extreme points, and then I would start setting a minimum. So if you basically, if you're looking on the hourly chart, you want to kind of give a good range and look for a wide berth of price. You don't want to try to catch all of these tiny little levels. You're just going to want to try to stick with these major key areas. You may not get exact touch points that line up exactly, but we want to try to find the most common area and just get it as close as we can, and that's going to help us out in the long run. But then notice now what's happening as we're looking at some of these more extreme cases. So right here is kind of more of a flat spot. We had resistance here, a strong candle up and then break down. Usually when the candle changes size like this and then either comes back or keeps going, where that price action immediately picked up speed, I'm going to use that as a breakout indicator. And typically we associate breakouts with involving with resistance or support, and then suddenly it changes direction and just leaves that area suddenly. So in this case here, even if we were looking on a higher time frame chart, so if you were to pull up the 4 hour, for example, and kind of use that use case scenario, let me get back to where I had everything loaded. There we go. And I'm trying not to get too lost in the train of thought. So notice how we have this little area that we marked out from the lower time frame. We could probably adjust it a little bit, and that's another key tip, is to move up a time frame just a little bit and try to look for where it's obviously kind of a flat spot. You may get some areas like this where it's kind of chopped up. We're just going to overlook that and ignore that. We're kind of looking right here where it's very well defined. So that will actually come into play later. Notice it's kind of shifting and pushing down. Broke back above. Now it's coming back, reacted off of it, and come down. So moving up in a time frame helps, but this gives a good indication of where we have an angled situation, and where we're going to get into the second part of support and resistance when we're talking about using a angled line for support and resistance. This is where you're going to hear where the most common rule that you hear is actually true the most. Usually you will get 2 to 3 touches, maybe 5, in some rare cases 7 actual touches off of that line before it eventually breaks. So if you see a trend line forming and price starts to move up, come down, react up, come down, and start to react up again, this move here, that it's about to make, is most likely going to be its final move, and then you're going to break that trend line. And that's kind of what happened here. So we kind of rode it, We broke out, come back, pushed down, pushed up, 2, pushed up, started to come back down, 3, and couldn't make that third push before it finally fell out. So on your angled lines, you're only going to look for a few touches before you expect that to break. And then on your horizontal, that is when you have the opposite of that rule, where the more it touches, the more relevant it is. And we're just going to look for these areas where we have space, price flips below, shows resistance in a common pattern that's flat, and then pushes away from or rejects, and then we're looking for these wicks. So in this case, we would kind of go with this here. And this is the part that I was getting to about ignoring these little blips above, these strong pushes above. And then you could also look, there's a very flat spot above. There's that little blip above, little blip above, blip above, blip above. They're going to form a different way each time in regards to height. But these little blips are usually indications that it's about to turn and go the other way. It's also an indication that where you have a key level, if you get above and then come back below, that may be an indication you could be wrong and may want to get out of that trade. So we'll get into that in another detail video on getting into this particular setup and this particular point and how the levels and price reacts to each other. So in this instance and case, we're just going to ignore these little blips when you're looking and just try to stick with that most common flat spot theory. So we'll kind of adjust that a little bit there and kind of get that to line up nicely. And now we notice we have a flat spot here that also lined up here and across there. And we're about to move to the next point here. I'm going to set up a couple of more, kind of show you some examples here. So I kind of line this up off of this little pin bar point here. So using that, and you can carry that even further back, and it kind of lines up a little bit closer to there, but the levels will kind of adjust themselves over time. So we had where it showed resistance move back up. We hit this level here, rejected back down, didn't quite make it all the way back down, and then come back up. So sometimes you may wind up with situations like this where this may wind up being a junk level. So we're just going to try to focus on the outside points, and that will help us with keeping the most quality levels, but we want to try to stay where the flattest spots are or where the most extreme points are. So by moving up on a time frame, on a higher time frame, you can kind of filter these levels out. And then also by sticking to the extremes. So if you see kind of where price was going flat for a while, you may want to kind of adjust a little bit and notice how that lines up a little bit cleaner with some of the more recent action, although it does kind of support much better now with what's going on here. So you may have to adjust these levels on occasion, but over time you'll kind of get the hang of this. You'll start noticing that how these look the same. There's open space, price pushed above, now it's kind of respecting, making common points, a lot of consolidation, and very slow price action around these levels will kind of indicate that you're correct. And you'll notice that how each one of them is kind of reacting in a similar way. So notice how here it was resistance, now we have consolidation, it's showing as support. Now later on it became a sharp point of support with a strong push up. We had an extreme point here, there were some pushbacks here, so that's where price slowed down. That's another point we're going to get into in another video, and using whether or not this level will hold or break so you can protect your trades. And then notice how it broke out and above, and now we started to slow down and try to push back up from there. Broke, come back, support, So it flipped right there, showing as resistance here, back to showing as support. Then you had a pin bar to indicate that strong push up, and then price just continued to travel up for a slight while. So just kind of make sure, again, just keep observing those flat spots. And if we carry this back a little bit further, we can notice how we have pin bars pushing off, and that would be a good indication of where that level is lining up. And then it kind of lines up here to make that zone area. So a lot of traders will make this zone, but then they make that over the top. So now you're looking at an extreme point. So I kind of like to look at these lines and just kind of allow a little bit of room either way, which way it goes. It also tends to keep with a little bit cleaner chart. So one thing you'll start to notice though is as you add in more lines, and I want to try to get to this before too many more minutes pass, but I wanted to get a few things lined up here. So notice it's quite flat there. Going back and just showing several different examples, and notice how everything's looking the same. There's that blip again, shows to a flat spot and continues on. Now we've got flat areas, consolidation that kind of line up in this area, breaks above, shows extremes, and a lot of strong pushes back up after it came back down to this level. And notice we're on a higher time frame chart. I go back down to the 1 hour. We'll look in detail. But one thing you'll start to notice is once I remove this line, notice how each level is starting to form kind of a consistent pattern of distance apart. So we'll go ahead and take a measurement to see what this is looking like. I'll change that color. Yeah, let's see here. Where are my settings? Let me just do it this way. Can I do it that way? No. Don't like those blue, but that's 115 pips. There it goes. And we'll make that so we can see it. But notice that's 115 pips. It's a little bit slack there at about more of like 100 pips. About 100 pips there. So you're going to see some slight variations, but notice how they're coming out fairly close together. And near the extreme, back near that 115 or so. So you'll start to notice this pattern, and then say, for example, it starts to make a new high, and you don't have any kind of indication of what's going on back over here. Let's say, for example, that line didn't exist. You could go ahead and pre-plan your next levels just by dropping them on this guide, and they will line up. Notice how that kind of gets around that peak. I'll add another line around here for that. And we could end up being a little bit off. We could have a little bit of an extreme level. I got that marked from somewhere. But these will start to actually get used, and you can adjust them as you go. But let's say, for example, you start to have a breakout here. You could plan for either here or here to be a take profit. And you could also probably expect, if it were to break out here, it will probably reject from here to retest here and then go up here, come back, retest here, because naturally the market will move in a higher high, higher low, higher high, higher low, higher high, higher low. And the way this market is moving, usually this higher low will line up on that higher high. This higher low will line up on that higher high. That lower low will line up on this higher high, or this, or there could be some sort of a way where it does a consolidation here, breaks up, comes out, consolidates, breaks up, comes down, consolidates, and that's where you're getting these levels and patterns involved. So one way you could practice all this, now that we've kind of gone through what you're looking for, the setups, how it's going to look, how everything is going to tend to work out. And I'll put a line here. We'll go back the other way for the bottoms for if it was going down. And look, notice how it lined up with that mark we made from earlier. So a lot of times that pattern of distance is going to let you know if you're pretty close to where that level is likely to wind up. And forever and a day, it's going to continue to follow this pattern. It may adjust slightly here or there, but it will ultimately line up. So let's see, we have something here. I would say we could line up that right there. I'll change it to a different color, and then we'll line up probably there. We've got a little bit of a wick and reject. We showed a strong push down and then reject, come back down, push below. We could probably line it up more about like that. And then we'll go and move forward, and look how it lined up here off of that point. It lined up with our line, getting pretty close with it there. So we could actually move that up to the more extreme and get real close to our line. And then where would we be in the middle? We would probably be about right there. Let's see where it would line up on our line here, going back. So not quite perfect in that instance, but it would be one of those situations where you have a smaller level and then a wider level. And that may actually end up being a little bit better off there to line up a little bit cleaner with our adjustment. And then it lines up right on that next line there. So that's 3 levels stacked in. You had one short in between, that's a little bit less, and then you had the 115. So notice we have that pattern, and you can expect that every time price moves up, if it is moving in an uptrend, it will likely pass the very level above it, and then as it comes back, that level that it just passed will become support. The last level that was resistance will now become the new target. It will move above and come back below. And this is how you can make trading plans well in advance, using just the support and resistance, and kind of know if you're on track for a good trading plan, which will allow you to net 100 to 200, 300 pips, depending on what you're expecting and what you're willing to hold on to the market and trade for. So I'm going to go ahead and close this out. Remove all the drawings, and then I'm going to show you a way to where you can practice this now for the very last part. So what I like to do is I'll shrink that scale, and I'll actually use probably a different, we'll go to a different pair. Let's see, what can we do here? Let's do USD. Yeah. Let's do a fun one. Let's do the Aussie dollar. And then what I like to do is, before I look at any price, just shrink this down, scroll it all the way down to where price will be on basically a flat line. You can scroll these way out. And then we will scroll back to enable the replay. Go back a little further. And then for this, you will need at least the basic level subscription for TradingView. So right now, in this case, we're having a breakout. I would probably go ahead and pick out the levels. So what we're going to do is we're just going to kind of pick out our levels. Notice, just kind of start off the wicks and look back. If it kind of looks like it's lining up with that free space and flipping back and forth, kind of a defined area, we're going to lay that out, and then we're going to kind of just see where things line up in the future. So after we laid out a few of our levels, notice how they're kind of lining up. Here I kind of looked for that little end. I'm kind of ignoring that for a second. I'm going to actually use this point here and notice how it was moving smooth here, and then the price and candles changed there. So I'm going to identify that as a zone. I would probably even, I would say probably right there. Notice how it's lining up, so I would adjust that probably down just a little bit more. And then just go ahead and pick out as many as you can, forwards and backwards. If you don't have any data there, just kind of observe what type of pattern that you're making, and what type of distance you're getting. Make sure you're kind of looking on a higher time frame chart to get the best results for that, most consistent results for that. And then just kind of lay it out based on that price estimate. It kind of helps too if you have more of a fixed scale than automatic. And just kind of try to fit that pattern as best you can. You don't really have to be exact. You just want to look at something that kind of makes like a uniform kind of ladder like pattern. And then all you're doing is waiting for price to come back or go back forward into some other levels. So you'll just pull out that, kind of check it out, make sure they're kind of close. Notice they're coming out very close together. They're lining up pretty well. So then what you would do is, if you don't have any marks, we'll go ahead and lay up a few examples and see how price reacts and respects those moving forward. And then we'll push the replay tool forward and see where we end up on our levels. Now, some of these that are out in the open that we don't have any reference points from the past for, we'll just kind of have to adjust those and see where it goes. And I'm going to go ahead and press the play button on this. We'll speed it up a little bit and see what happens with price as it gets to that level. And then this is how you can check yourself to see how things line up and see how it reacts. Notice it kind of pushed back, shoved below, and now we're going as resistance, pushing down. And you'll notice that price will either consolidate, now it's showing support, shoved down. And this is how you can test yourself, just see how price reacts as it plays forward. And if you notice that price will regularly react from your area, notice how it touched and then shoved away again, you'll see how everything is sort of lining up very smoothly. And once you're seeing that, you can know that you're confident in having the right levels picked out. You can feel free to use these levels in the video that I had shown. We went over the GBPUSD, the USD AUD, and we also cover the Euro. The Euro is my primary focus. Notice how we have this flat zone here that worked out. We have the breakout. Now we're starting to push below. Price rejected a couple of times there. Shoved above, rejected, shoved above, come back down, hit flat. Now it rocketed right back to the next level. Goes above, it's holding a support. It'll go to this next line we had picked. Look at that. It is going flat. And now we're going to have another break. Boom. There's that little list, but it keeps going. It rejected. So here's the point where we would kind of adjust our level. And notice, boom, huge rejection. Oh, I hope you really saw that. Look at how well that just played out. A massive pushback off of that level that we picked out 1, 2, 3, 4 levels in advance with just looking at that pattern. Look at how beautiful that lined up. So when you're seeing things like that, that's how you know that you have the right pattern, you have the right levels, and you know exactly where to trade from to give yourself the best advantage. So to wrap things up, we'll just go and look. So we kind of covered what support and resistance is, what defines a valid level, We know how to filter which ones are quality and which are junk. And this is, like we covered, mostly based on how long you want to hold that trade for. These patterns and ideas that we covered on the hourly, 4 hour, they'll work on the daily, weekly, monthly, all the way down to the 1 minute if you really want to trade that low. But I would advise trying to stay above the 15 minute chart, especially if you're just starting out, because things move a little bit. There's a little bit less excitement until you kind of understand more about price action and how price is actually moving in the overall perspective of things. But that will also give you time to react. It'll also give you a little bit clearer picture on what's going on. And for example, your patterns are going to be larger on larger time frames, but that's also going to equate for more room for your trade. But we'll get into a trading strategy of how we're going to use these patterns and use these levels in coming videos. We're going to cover that really in depth. So right now we just kind of know how to use these levels, because what we're going to be looking for is if price is coming into the level from below, it's more than likely going to be resistance like we saw in the example. And if it's coming down from above, it's probably going to be support in the near future. So we'll talk about more on how to use those in coming videos. And the real thing now is just to go back and practice. Zoom back your replay on TradingView or whatever your backtesting software is, and just kind of pick out your levels and then hit play and see if price will react around the levels that you had picked out, just like we showed in the video. So that's going to wrap it up for this one. If you really got any value, it's YouTube. Just give a subscribe, like, thumbs up. Any questions, comments, concerns, just leave them down below. I try to respond to everything. And a big shout out, thank you to everybody that's watched this far. We'll catch you guys on the next one. In the next video, we're going to cover more on what we're observing at these levels, of how we can get more of an edge out of what we're seeing in the current price action or current time, and look at a couple different ways we can actually trade off of that. So in the meantime, just get that practice in, and we'll see you on the next video.